Let us talk about altcoin narratives, because if you want to make the money in 2023, and I know we all want to make the money in 2023, it's fun to wait until the Bitcoin halving. It's 270 days away. It's not that far away. And yeah, we're accumulating those long-term positions. And yeah, we are patient to wait our 2 years. It's only 2 years, is not that long, to see markets going crazy again. Hey, and like I said, maybe I'm wrong. And maybe the guys who've been calling for these new highs in 2023, maybe they're right. I hope they are. They're fantastic. I'm here for it. But until then, what has been proven to be making money throughout 2023 is by being a basically dialed in nerd, being willing to get your hands dirty and get on chain, because we have seen all these narratives running up through 2023, and almost everything has been happening on chain. If you want to make the money, you got to get on chain. So I want to dive into some of this with you, because there's a lot of things that have been happening, and we've been talking about quite a bit of this. Some I've completely missed, like the Telegram bots narrative. I don't even know how big that's going to be, but that's pretty interesting. It really took off. We saw some pretty big returns coming in for some of those Telegram bots, but there are new narratives. People are making money. People are making big money. In fact, one guy, a couple guys, probably insiders. It's usually how it goes. But anyway, some people made like 40,000% returns on Bald. This is the new meme coin on the Coinbase base Ethereum layer 2. It's named Bald, of course, because Brian Armstrong, the CEO of Coinbase, is bald. We're getting really inventive here now, guys, with our meme coins. Yeah. Now let's talk about the layer 2 narrative. So Emperor Osmo shared this chart here. This was a massive spike in Ethereum fees that happened over the weekend. We saw Ethereum GUI costs go from about 20 GUI up to almost 400 GUI at the peak. Now, that means that if you want to do a swap on Uniswap at that time, you would have, instead of paying the $10 it usually costs, you might have had to pay $300 or $400. Maybe not quite that much, maybe only been $150 or something. But that's not good. We are still at a relatively quiet time for the market, as we've seen so much of the sentiment point out to us. And yet we still have these crazy gas fee spikes where we will see Ethereum gas fees go sky high, like a skyscraper. It's the Burj Khalifa. Or is it Burj Khalifa? Yeah, the big tower they got in Dubai there, man. That's what this looks like. Just a massive spike of the fees going crazy, super quick. And that is not great, because what happens when markets really take off? We will see fees go higher for longer and stay up there. This is why Ethereum layer 2s are getting so much damn attention, because that is a real problem. Now, hey, as DeFi Dad points out, though, silver lining to that is that if we were to maintain such crazy high gas fees for a year, people would still use Ethereum. You think they won't? We did. For all of 2021, gas fees were absurd. The amount of times I went to Uniswap and had to pay $50 or $100 or more sometimes to do swaps on Uniswap, it's sickening. It's crazy, man. But we did it because you had to sell those coins sometimes, right? Or you had to buy those coins sometimes. But if we were to stay with such redonkulous gas fees, we would burn 10% of the Ethereum supply this year, thanks, of course, to the burn mechanism for Ethereum. So that would be pretty crazy. Not that we're going to do that, but it gives you some perspective of how crazy the gas fees have been. Now let's talk about Coinbase's base chain. This is the new big thing that everyone has been aping into over the weekend. A lot of people have been talking about, hey, here's an area where this could be a big money maker. So far, we've seen about $50 million worth of Ethereum make a one-way trip. It's currently a one-way trip into the Coinbase base chain. Interesting, because we're going to see a lot of that money, because it can't escape until later when Coinbase builds a bridge to get out. But a lot of that money is not going to be able to do very much for a while. But still, people are aping their money in. They're taking that one-way trip, and it's not surprising. Ethereum people are interested in making money, and of course, used to taking one-way trips. Remember, Ethereum staking was a one-way trip for a very long time. It took 18 months or something like that before you could unstake your coins. Was it longer? I think it was longer, actually. Pretty crazy stuff. 2 years, yeah. staking your coins for an indefinite period of time, hoping at some point in the future you can unstake them. It's a big risk for a lot of people. And of course, we see early risk takers taking the risks here on the base chain. So we're seeing tens of millions of dollars flooding into the base layer 2. We are seeing shit coins pulling 40,000% overnight gains. The bald coin. The new crypto casino is open, my friends, and people are already in there gambling away and making money, throwing money into basically every new thing that they can get their hands on, because there be gold in them dar hills, my friends. And a lot of people, of course, as is always the case in a new gold rush on a new chain, will lose everything. They're not going to find the golden nuggets. The people selling the picks and shovels, that'll be the bridge providers, that'll be Coinbase, that'll be the companies selling tokens, et cetera, et cetera. They're the ones that are going to definitely make a lot of money. Other people, some will hit it rich, a lot won't. But the upside risk reward ratio to getting early into some of this stuff is what keeps bringing people into these new chains. Look back at Arbitrum. When Arbitrum came out, some of the new ecosystem plays that launched in Arbitrum exclusives, they went insane. Tokens that came over from other networks to Arbitrum also saw massive user growth. So there is definitely money to be made chasing these narratives in these new layer 2 networks, but you have to be early. You don't want to be the late buyer. So that requires rolling your sleeves up, putting in the work, which is not always easy, but that's where the money gets made. Some other thoughts here for you. Yes, it's nice to hear a story about some guy who made 40,000% on a meme coin. That's probably not going to be you. This is the equivalent of winning the lottery in crypto. The guys who bought Pepe early, et cetera, a lot of the time, it's a group of insiders. They knew about the launch. Some other guys might have got lucky and got on board, but often we see this being the case. But remember, it's only a handful of people, 5 guys, 10 guys. Half of them could have been the same address as owned by one person. Very, very few people made 40,000%. Now, a lot of people did make a lot of money, even if they got a little bit later into the party. But a word of warning, because it can be so easy to let FOMO take over when you see this happening, to let your rational brain just switch off and basically stop thinking and just FOMO. And I've got to just FOMO into every coin launching on Coinbase's layer 2. I'm going to find the next bald meme coin. Bet more, risk more, degen more. That's what your monkey brain, your lizard brain starts telling you when you see these kind of gains happening, literal overnight riches. I just want to let you know, there's always going to be the next big thing. So if you have missed it, just be patient. Watch out for the next big thing to come along, right? Find out how these other guys found out early, how you can find out early for the next things, because we've seen this play out multiple times this year. We had Pepe and all these other things that have made huge gains for early investors. There's been so many 10x, 100x, 1000x coins already this year, and they're out there. They're out there, but you got to put in the work to find them. So instead of trying to find something that's already gone crazy, well, find something that hasn't gone crazy yet. Find something people are just starting to chatter about. And of course, don't get chopped up. Don't get chopped up. Again, be patient. Be patient. The easy time in the market will come. Right now, we're still pretty much in hard mode for the cryptocurrency market. And I know it's really tempting to want to feel like you need to be doing something all the time. I have to fight those urges on myself from time to time and say, hey, you know what? I don't need to always be doing something. Sometimes just the boring stuff is okay. In fact, investing is largely a boring thing. You don't need to be seeking excitement all the time. You want excitement? Go get on a roller coaster, man. Investing usually should be a bit boring. There can be exciting times you can pat yourself in the back and go, man, I really got that one good. But for the most part, it's not that exciting. You're going to want to be more restrained with how you approach the markets. Let things be a bit boring for you. Don't get chopped up trying to chase the hype, chasing green candles. When everybody on your social media timeline is talking about a coin, it's usually too late. Just keep that in mind. I did want to expand out, though, on the idea of the layer 2 thesis, because it's something we've been talking about a bit, something I'll continue to talk about as I see it continue to be a relevant narrative. Seraphim here pointed out that Binance users went over to the BNB chain. Coinbase users could go over to the base layer 2. Remember, Coinbase got 100 million people signed up with accounts. Huge deal. Huge deal. BYBIT users could all go and ape into the Mantle network. Of course, we've covered the Mantle network a few times here on the channel. MetaMask users, well, maybe they're all going to ape into the Linea network. These are all, new layer 2s in case you're not familiar with Base or Mantle or Linea. They're all the big new things in the layer 2 space. I think early movers in a lot of these space, this is, the new DEXs, the new money markets, whatever it'll be on these chains, interesting places to look. More on that in just a second, but Seraphim, as he points out here, the recurring theme of weaponizing your CeFi user base to increase revenues via sequencer fees, convincing your users that they need to be paying gas for the same apps that they're already using for free is the ultimate benign psyop. Okay, I dig it. But it definitely, if we look at people getting into these new chains, the user bases of these exchanges or products, if we talk about MetaMask, is insane. We are talking about very, very big numbers here. Hundreds of millions of people between all these exchanges that are going to get access to these new layer 2 networks. So it's pretty gosh darn cool. Now, I talked about the layer 2 trade thesis on a recent stream as well as in the newsletter recently. So just to share a few highlights from what I wrote in the newsletter here. Layer 1 trades were the big thing in 2017. Again, in 2021, 2017 saw coins like EOS, Neo, Icon, and others moon like crazy. 2021 saw some big new players like Solana and Avalanche actually come in and capture market share. These have much stronger chance to create staying power because they already have users, right? Others like Moonbeam, Sui, Aptos have not really seen a bull run, and I'm sure some of them will manage to attract liquidity and hype. But one thing bouncing around my mind recently has been the layer 2 trade. This is the idea that Ethereum layer 2s might just be the place to be for this cycle. So there are 3 ways that as an investor, you can try to capitalize on this. The first is to farm for airdrops. So look for chains that have not launched tokens yet. Now, Base, the Coinbase layer 2, they have said they're not launching a token. But you never know. That could just be what they're saying right now because of the regulatory scene. They may, in 6 months or a year, 18 months, launch a retroactive airdrop. That's a possibility. They've said they're not going to have one, but there's others who have said they were not going to have one and they had one. So if you're using Base, hey, there's a potential you might get an airdrop in the future. Let's just assume not, but you never know. You might be surprised one day. ZK Sync, it's another big one. They're going to do an airdrop. Linea, they're going to do an airdrop. So by actually using these layer 2 networks, being early adopters and using the money markets and doing swaps on the exchanges and stuff like that, bridging money over, you potentially position yourself for an airdrop that could be worth thousands of dollars. So you could take $100 or $200, bridge it over, play around, swap stuff back and forth, have a good time, try out some different apps, and you might be up for an airdrop for the main chain. It's worth a shot. Look how much money some of these past airdrops have made. And what's even more interesting is that we have tokenless protocols. So for example, ZK Sync's Sync Swap. Maybe they're going to do an airdrop to people in the future, right? They want people to come in. They want people to bring their liquidity. They want people to start using their products. And when you do that, you stand the chance to get potentially multiple rewards in the future. So let's imagine that as an example, you're using ZK Sync and you're doing trades on SyncSwap. You're providing liquidity on SyncSwap. You're also using, I think, is it mute.io? Pretty sure it's another ZK Sync based decentralized exchange. You're using that one too. And let's say in the future, you're positioning yourself for 3 airdrops. You get the ZK Sync airdrop, you get the SyncSwap airdrop, you get the mute airdrop. None of those may do airdrops. Maybe all of them do. That's the airdrop game. You never really know, but you can position yourself in case they do. And the upside potential for positioning yourself for that is massive. So that's one way to play it. The second is good old-fashioned spot buys on these ecosystem coins. So I've been buying a lot of the Arbitrum token. Now, I don't love the Arbitrum token from the sense that it doesn't really have any value capture. It's a governance token. And it is a bit of a gamble, I feel, in that sense. That can change in the future. Maybe we'll see more money markets bringing more value to the ARB token, for example. We'll see. Others like Mantle, interesting. I'm going to keep an eye on that. I may get a Mantle position at some point. I don't have one yet. We'll see how that goes. I may or may not make an entry in that at some point in the future. If Base ever did a token, that would be very attractive, I think. I own Coinbase stocks. I think Coinbase stocks still could have a 10x potential. I'm holding my bag for a while for the Coinbase stocks, but I will plan on taking complete profits on my Coinbase stocks during the next market cycle. And then, of course, there is the small ecosystem plays. Now, Arbitrum proved the relevance of this thesis, but basically it is this, that new launches on these layer 2 networks have big upside potential. So if you look at some of Arbitrum's earlier movers, like Radiant Capital, right? Radiant Capital went from 2 cents to 35 cents or something like that. It went crazy, went absolutely crazy. And of course, there are huge farming opportunities for early users as well. Others, Grail, a decentralized exchange on Arbitrum, huge gains. I don't remember the exact numbers, but huge gains were had by early Grail buyers. I highly suspect you're going to see a very similar situation play out. I'm watching Coinbase's Base. I'm watching Consensus's Linea. I'm watching BYBIT's Mantle, and I'm watching ZK Sync. There are other layer 2s. You can't watch all of them. Even just watching those ones for me like boggles my mind, and I'm going to miss a lot of stuff. But if I can catch even a couple of, these smaller caps as they launch in the earlier days and maybe get, a couple grand into some of these, like you might get a 10x return on some of these early ecosystem plays. You might get more. So this is where I think we're going to see some of that narrative money being made in the layer 2 space moving forward. And of course, if you're not signed up for the newsletter yet, where I shared those thoughts, and we share lots of other thoughts, whether it be on DeFi, whether it be on altcoins, new narratives, news, airdrops, we talk about airdrops all the time, much, much more technical analysis, all that fun kind of stuff, then you got to get signed up to the Wealth Mastery newsletter. 75,000 readers a week are enjoying this newsletter coming straight to their inbox for free. Yes, it's for free. So go ahead and check it out. You got nothing to lose. So check out the Wealth Mastery newsletter. It is the best crypto newsletter out there with the most alpha by far. So check it out. Link in the description, or just go over to thewealthmastery.com.